Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Businessweek. I'm Tim Stenovec. That's Emily Graffeo in for Carol Massar this afternoon. Well, I don't know if you saw this, Emily. We've been talking about U.S. equity markets, but emerging market stocks and currencies slid on Monday. They were weighed down by concern over the prospect of U.S. tariffs under President-elect Donald Trump and disappointment over China's latest stimulus measures. It's the U.S. tariffs part that I want to focus on here, and that's why we're bringing in Erica York. She's senior economist at the Tax Foundation. It's a nonpartisan tax policy nonprofit. Erica joins us from Manhattan, Kansas this afternoon. We're all trying to figure out, Erica, how much tariffs are going to cost and how much money tariffs are going to bring in and who's going to be paying for those tariffs. Help shed some light on this.
Those are the big questions. We've estimated a 10% universal baseline tariff, so applied across the board to all imports, would raise about $2 trillion in tax revenue for the U.S. government over the 10-year budget window. For the average household, that would be an annual tax increase of more than $1,200. If the universal tariffs were 20%, the revenue wouldn't quite double because imports would drop by more. But we've estimated that would bring in about $3.3 trillion for the government and increase taxes by more than $2,000 for average households. Now, those are all big numbers, but they would not come close enough to offsetting the cost of the tax cuts that Congress is considering along with President Trump. So they would generate a lot of revenue, but not enough to pay for the tax cuts. And even so, lots of lower and middle income households would be worse off under some type of tax and tariff combination.
What does that mean for GDP then, when you have kind of the tariffs not quite, I guess, balancing out the revenue hit that they get from the tax cuts?
It could actually mean we're in a situation where we have a combination of policies that on net cuts tax revenues and also shrinks GDP. It'll really depend on which dials Congress turns on the tax policy side and how far Trump or Congress together go on the tariff side. But tariffs will create a drag on economic growth and potentially a big enough drag when you factor in foreign retaliation that it offsets the economic benefit of better tax policy.
Enough drag that you'll see pushback from within the Republican Party for President-elect Trump not to do this when he takes office?
Maybe. I certainly think there's support for the China-specific tariffs. I think the universal tariffs are where there's more chance for pushback. But this was a huge part of Trump's campaign platform. And there's kind of two sides. If you listen to some advisors around President Trump, they'll say this is all just bluster. These were just campaign ideas. But if you listen to others, and particularly look at like things that Robert Lighthizer has written in a book, there's huge support for universal tariffs, both as a revenue mechanism and as a trade policy. So I think there's just too much uncertainty to say what's going to happen. But I come down on the side where I think the tariff threat is very real. And I hope that Congress can maybe pull the president back on it to some extent.
What would be your message to lawmakers? I mean, you have the numbers, and I'll be honest with you, Erica, we had a lot of numbers before the election as well. And obviously that didn't sway voters. The idea of them paying more as a result of tariffs wasn't something that resonated with them, or maybe wasn't something that they necessarily believed. So actually I'll start with the message to them. Like, what would your message to them be, given that this is something that Americans voted for?
Maybe they voted for it. Maybe they voted for Trump's version that says China is going to pay for the tariffs and they're going to create jobs here. I mean, that sounds great, right? But unfortunately, that's not reality. Ask a small business, ask a farmer who is impacted by tariffs. It's businesses in the US that are importing the things they need to do business. So those tariffs are going to raise the cost of doing business here. The immediate effect of that is US business owners asking, am I going to pass these costs on to my own consumers, or am I going to have to cut back? Am I going to have to cut jobs? Am I going to have to cut wages? Am I going to have to cut production because I can't afford to do business here anymore? So the impact would be real and would be felt by Americans.
Do you recall when the USDA gave billions of dollars to agricultural producers who were affected by the retaliatory tariffs from China? We're talking soybeans, corn, wheat, dairy.
Yes.
This was like a bailout by the Trump administration.
Yeah, pork producers, sorghum producers. China quit importing U.S. ag products. That meant export losses, which directly reduce income for U.S. ag producers. And to compensate them for that, the U.S. government made direct subsidy payments to farmers. And in fact, they used up about 90% of the tariff revenue that came in from U.S. imposed tariffs to bail out farmers who are hurt by retaliation. That undercuts the message that we're going to use tariff revenues to do other things like tax reform if we actually just have to send it right back out the door and compensate sectors that are hurt by retaliation.
What timeline are we talking about here? When would we potentially see the effect of these tariffs if Trump, I guess, is able to pass everything that he actually wants to?
Yeah, again, uncertain. It's likely that new investigations would be opened up right at the outset when Trump takes office. Those can take, anywhere from more than 200 days for the Commerce Department to fully go through that, to issue a report, after which the president recommends what actions he wants to see taken. So if it goes through those channels, it wouldn't be immediate. Now, there's some talk that Congress is considering legislating tariffs as part of a tax reform package. That could potentially be quicker if we're under full Republican control and we have reconciliation. I think that's less likely, though, because I don't think there's broad GOP support to vote on significant tariff hikes. So it's probably going to take the executive route. And depending on, what authority the president uses, there's processes set out in law that dictate how quickly those tariffs can be put in place.
Erica, I'm glad you're talking about tariffs, and it's something that we've talked a lot about, and we're going to learn a lot more about, at least how Trump implements them when he does get into office. What other parts, but it's not his only economic policy. This is what you're focusing on today. It's what the new report that you have from the Tax Foundation is. That said, what other policy should we be focused on ahead of the inauguration?
Yeah, the big thing on the tax policy side is that the vast majority of the changes made by the 2017 tax law are scheduled to sunset after 2025. So that's all of the individual tax cuts, the estate tax changes. There's changes on the international side that are scheduled to take place. And there are important business investment provisions that are phasing out, like bonus depreciation, or that have already changed, like R&D expensing. All of those are going to be on the table in 2025. And lawmakers right now are working on their game plan of, what are we going to do? Are we going to extend these? Are we going to make them permanent? How do we pay for it? Trump will, of course, have a major influence over that legislative process. And it could get going very quickly when Congress comes back in town next year.
Well, you're going to have to come back before that. We definitely appreciate your time. Erica York, senior economist over at the Tax Foundation, joining us from Manhattan, Kansas. Again, the Tax Foundation, they're a nonpartisan tax policy nonprofit. They're out with this new estimate of that universal baseline tariff, finding that a 10% universal tariff would raise $2 trillion and a 20% universal tariff would raise $3.3 trillion. That's between 2025 and 2034, excuse me. But that would end up costing 10% on average, $1,253 in increased taxes, and 20% would increase taxes on U.S. households, according to the Tax Foundation, by about $2,000 on average. Emily Graffeo in for Carol Massar this afternoon. I'm Tim Stenovec. You are listening to and watching Bloomberg Businessweek.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
We honor those who serve each and every day, but especially today because it's Veterans Day. And from an investing perspective, remember, we are Bloomberg. We're thinking about data. We're thinking about money. Not everybody has the same needs, and that's where Siebert comes in. Mark Malik is Chief Investment Officer at Siebert, and Kaj Larson is head of military investing and communications at Siebert. He's also a 5-year active duty Navy SEAL officer and currently serves as a SEAL Reserve officer assigned to U.S. Special Operations Command. They both join us here in the Bloomberg Interactive Brokers studio. Guys, good to have you with us. How are you?
Good. Thanks for having us.
Awesome. It's an honor to be here.
Well, we're happy to have you guys. Look, I want to start with you, Mark, because Siebert's a unique organization. I mean, I used to be on the floor of the New York Stock Exchange, and that name just has a lot of meaning because of who founded the firm, and she broke a lot of barriers. Talk a little bit about how that philosophy plays into sort of the DNA of the firm.
Yeah, interestingly, the firm is as old as I am, and if you look at me, you can tell I wasn't born yesterday, so the firm's been around quite a long time. And unfortunately, Mickey is no longer at the head of the firm. However, you aptly put, her DNA is still with the firm. We're very much focused on the client. We're a very client-oriented firm. I know everyone will tell you that, but in this day and age when everything is pretty much gone digital, we got all the digital stuff, but we still got a lot of people that are focused on the client. Pretty much everything we do is focused on the client, and we retain that, and that's what makes us a little bit unique in an industry where everyone does everything. We do everything, but we still focus heavily on the client.
Yeah, the namesake of the firm, Muriel Siebert, the first woman to own a seat at the New York Stock Exchange. So talk to us a little bit about veterans' needs and why you have a dedicated vertical at Siebert just focused on veterans.
Right. So, Kaj could talk a lot about this as well, but, we know that, veterans are very much underserved in the investment community. And with the help of people like Kaj, we were able to come up with things that we think would resonate more with that community in terms of education, in terms of specific types of investments that would resonate with them, things that they want to see, things that they're comfortable with. We have the traditional stuff, but, focusing on what their needs are, what makes them comfortable is really important to us. And that's how we've designed all of our investments around that.
So, Kaj, come on in here because you have a history in the military, active duty Navy SEAL for years, still involved in the military at this point. How much did you think about investing when you were actually serving?
Well, not nearly as much as I should have, Tim, right? I was more focused on gunslinging at the time.
Look,
right?
That's the answer I was expecting to get.
Yeah. And now what I'm trying to do as a more senior officer is help young people at the beginning of their service members' journey be a little more sophisticated than I was, right? And one of the ways we're doing it at Siebert is kind of adopting the same model, a fusion model that we did in the military. In mission planning, we say Intel drives operations, and we're using that same paradigm at Siebert, right? So I have Mark over here. He's the 10,000-pound brain, right? I'm the Paleolithic knuckle dragger who's going to execute all of these really interesting and dynamic portfolios that we've created, and that's how we're doing it. I think the key here is that the veterans community and the military community is not a homogenous organization, right? There's a lot of variety, and there are no one-size-fits-all solutions. So what's helpful about having someone like me with 13 years of total service, I continue to serve in a special operations unit. I understand I've walked a mile in the boots of similar to a lot of these military members and veterans, and so then I can help calibrate, I can help educate, and then help calibrate appropriately to help build wealth within this community that, as you mentioned at the top, is often left behind by the private wealth community.
Kaj, what are you seeing right now? What are people who are currently serving asking about when it comes to their finances? Is it more budgeting? Is it what should I invest in? Is it saving money?
Well, today, like everybody else, they're asking about Bitcoin, right? And the truth is, the military has actually been leading edge on some of this stuff, right? Bitcoin itself comes out of a sort of cryptological function that was developed in the military. So there actually is some interior and intrinsic knowledge that service members have, but maybe don't necessarily realize that they know, that can help them in their investing journey. In general, absolutely. You hit the nail on the head. Right? First, we have to tickle interest in investing, right? And you have to save before you can invest. So a huge part of our firm and our mission is devoted is devoted just to closing this knowledge gap in order to like increase the rates of financial literacy. We're not the only people that are doing that. There are organizations within the Pentagon, the Office of Financial Readiness, and then organizations, private sector organizations like us outside the Pentagon that are doing it. But it really takes a village to make a smart Marine put his money somewhere good.
But I guess the challenge is, Kaj, that oftentimes somebody gets done with being in the military and they don't necessarily have enough money to start to put to work. They're more focused on providing basic necessities and providing basic needs. I mean, we talk all the time about the inability of this country to serve its veterans.
Yeah, I would push back on that just a little bit. I think in general that principle is right, but contrary to popular belief, and this is part of the reason that the military community has been kind of largely ignored by the street, is they always thought that the account sizes are too small, they don't have enough money. But relative to their socioeconomic peers, actually service members often have quite a lot of discretionary spending. And it's because of non-calculated things like the cost of healthcare, something that a lot of military folks don't have to worry about. Things like BAH, basic allowance for housing, right? So because of that, they have more, I'm not saying a lot necessarily, but more income relative to their socioeconomic peers. And frankly, like, yeah, we're an old firm at Sieber, but like cutting edge technology, right? Things like, you know, the advent of fractional share investing. We say like you can start investing with as little as $1, right? The problem for us from the financial education literacy perspective is, you know, you still get a lot of young enlisted guys in the military going out and buying that new Mustang at a 21% interest rate. There's an entire predatory industry designed to take service members' money, and only a few of us focused on building their wealth.
So, Mark, when you're thinking about where to actually allocate portfolios, do you make veteran-specific trades? I'm an ETF reporter, and so there's a number of ETFs out there that are focused on defense spending or infrastructure or crypto. Is that kind of your approach to investing?
Partially. I mean, at the core, we stick to the standard principles of investing, right? So we try to match up portfolios to risk tolerances of the clients. But we also like to put things in there that the clients understand and that they would want to invest in themselves. And so the idea is to get them to focus on more long-term investing. When a lot of these young hotshots come out, they want to put it all in Bitcoin or something like that. But we try.
They would. By the way, that would have been a good move.
Right? Exactly. You caught me, right?
No, yeah, you don't see me doing it.
Yeah,
but yeah.
Similarly, but we try to teach them that sort of long-term focus. But still, at the end of the day, we want them to be able to open up their accounts and see ETFs in there that resonate with them, right? So yes, we do put those types of things in there that they would say, yeah, I know what that is. I get that. I'm happy that I'm putting my money there. And so on top of that, we're constantly managing them to stick with their risk. So for instance, you brought it up, if Bitcoin was in their portfolio, obviously Bitcoin, the risk of Bitcoin changes as it goes up and down, mostly up. And so, we've got to constantly be managing that to make sure that the portfolio is still in the right balance for the client.
Is that part of the portfolio now? Is Bitcoin part of it?
It is not a core part of the portfolio, but it is something that can be added to the portfolio.
But it's not the type of thing now that you're saying, okay, if you want to invest in this stuff, you're doing it outside of Siebert.
No, we help them with that as well,
do.
right? So, our hope is to, manage their core money, right? Mm-hmm. So we're like let's call it the savings account of yesteryear for them. And then we do encourage them to go out and try other things, and we help them with that as well. We advise them on that as well. But we always like to know that the core portfolio isn't that important set of ETFs that is going to provide them with that risk-adjusted return that's right for them.
And to underscore Mark's point, we try and speak to our service members in language and metaphors that they understand. So we say, just like you wouldn't go to war with a single bullet in your magazine, we expect you to have a diversified portfolio, many bullets in your magazine, and we expect you also, just like in mission planning, to have contingencies, things like a rainy day savings account and things like that. So the tried and true principles of investing are really good for the military community with some of the additional sidecars that you guys were just discussing.
Can you talk ETF tickers? Are there any particular ones that you like right now?
Remember, she's an ETF reporter.
Yeah, so for us, it's interesting. So for us, it's not that we like the tickers as much as we want to have exposure to those tickers, right?
Yeah.
So when we select a ticker for our portfolios, it's going to be based on what type of exposure will it give us to, say, defense, right? And then we will look at the ones that do the best job, right? The ones that have the best tracking error, or the ones that are the cheapest, right? And of course, the ones that are also have liquidity, right? So we want to make sure that there are a lot of great ETFs out there now, especially some of them which are actively managed, but they're very tough liquidity-wise, and we want to be able to give access to our clients very quickly to their cash and be able to rebalance when appropriately. So what we do is we take the best of the breed, and then we change the allocations based on how well the market's doing, how well the ETF might be doing. So we might take some off the table, we might add some to the table based on what our algorithms are telling us.
Hey, we only have about a minute left, but then we're going to come back with both of you after we do some news. Kash, I want to let you just close it out here. I'm curious what you're hearing now from active duty service members that's kind of different from when you served earlier in your career. I think you're still active duty, but reserves.
Well, now on the reserve side, serving in another, we could waste our whole minute talking about my circuitous career journey in the special operations community. But in short, what I'm seeing is an increased level of sophistication when it comes to financial knowledge and literacy. Like, whether that's actually translated into investment is still to be determined, but there certainly is more interest, there's more information, there's more alternative sources for information, and you're starting to see, especially with the advent of these alternative assets, service members paying more attention than they had in the past. The other small thing, I know we only have 10 seconds here, is that the military retirement system has changed, and that's made it that's a forcing function to make people be smarter about their pay.
I want to get right back to Mark Malik, Chief Investment Officer over at Siebert. Kash Larson, Head of Military Investing and Communications at Siebert. Kash, also a 5-year active duty Navy SEAL, currently serving as a SEAL Reserve Officer assigned to U.S. Special Operations Command. Not going to have you give up any state secrets at this point, Kash, but...
Well, I will say it's a teeny bit dated. I've retired from the SEAL teams, or I've left the active duty and the reserve SEAL teams, and now I'm serving in a new special operations unit for the state of Florida. So yeah.
And on Wall Street.
But that being said, I'm still not giving up any state secrets. Yeah.
Okay. And just give us an idea of what that looks like in terms of how you're able to do those things concurrently. I think a lot of people have misunderstandings about how the reserves work, or how people are able to continue serving their country following like a full-time stint in the military.
Yeah, absolutely. Well, the reserves have for a long time been an essential part of the Department of Defense and our national security apparatus. And when I was a reserve officer at U.S. SOCOM, I had a civilian job, and I was in media. I was a war correspondent at CNN, and then I had an HBO series and a Netflix series, and I was able to balance those effectively with my time still in uniform. I'm doing a very similar thing now, as I'm running the military vertical here at Siebert Financial, and then simultaneously still able to serve in a special operations unit for the state of Florida. So look, it's hard, and a lot of military folks face these kind of challenges. They say if your boss is slightly unhappy with you, your commanding officer of your reserve unit is slightly unhappy with you, and your wife is slightly unhappy with you, you're probably doing all three okay. But it does speak to and underscore the challenge of life as a service member, is that you often have incredible sacrifices that you have to make, and you have to balance this civilian side and military side of your life. That extends all the way to your finances, kind of the foundation.
So, Mark, come on in here, because you are Chief Investment Officer over at Siebert Financial. So we'd be remiss if we didn't ask you, like we're asking everyone, about the state of the markets these days, especially given what we've seen over the last week after the decisive victory by President Trump.
Yeah, it's been an interesting couple of weeks for all of us. We had all those great earnings just prior to the election, and we haven't even had a chance to really sort of look at these, this rash of Mag 7 stocks that we heard from that's been driving the markets higher, and suddenly
Tesla still,
and suddenly get the elections, and now we're focusing not on the Mag 7 but the MAGA 7, right? So we're trying to figure out what of this stuff is going to stick, what is not. A lot of it is a little, I would say, probably took some of us by a little bit of surprise in terms of magnitude. But in terms of the things that have been going, the handwriting was kind of on the wall. So, we're seeing, as we expected, we expected a continuation of the prior trends, maybe a little bit turbocharged in those areas that that Trump was very clear that his administration would focus on. But, in terms of the magnitude, it puts us sometimes in a rough position saying, we like this sector, but we can't get into this sector now because it really played out a little too quickly maybe last week.
So what specific sectors come to mind when you're thinking about, now we know who the president is, so we have a better idea of what policies are going to be in play than we did maybe a few weeks ago?
Yeah, so I think for us, we expected, the financial sector to definitely get a boost, increased deal flow, all sorts of deregulations, things like we all expected that. And the interest rate environment, although that is rapidly changing, that should be an environment that should be pretty good for, traditional lenders and things like that. I think that the markets responded much more aggressively than we expected, although we still believe that there's room, but we have to be a little bit more careful with that. Obviously something that we've focused a lot on that may not be attributed to Trump is, we can't ignore technology, broader technology, information technology sector, and also in in the telecom sector, the communication sector. We saw a lot of potential there. The what I call the AI ecosystem. We believe that is going to continue to move. But under under Trump, we have to look at things a little bit differently, right? So, I've always used the supply chain analysis on the Bloomberg, right? And it's becoming a more and more important part of our life every day. As we're looking at any company, we're checking geo exposure from these companies, and it's part of it's a factor now in our models. Where prior it was just something to say, well, if there was increased tariffs, or what does that mean to this company? It is, that and interest rates, right? Which I'd be watching one on each one of these screens right now.
Right. By the way, the supply chain analysis function on the Bloomberg terminal, SPLC. I don't know about you, Emily.
It's my favorite.
My favorite.
It's one of my favorites.
It's pretty cool.
ETF Go is one of my favorites too. I got to say that. But yeah, I love that one.
Yeah.
I actually wanted to go back to something you had said earlier about how, people had been piling into the Trump trade before the election results came in.
Yeah.
So does that mean that you kind of fade the Trump trade now? You don't buy the traditional, like, Bitcoin, industrials?
Yeah, it depends. It depends, right? So, it was very interesting. Another thing I like to do is, on the Bloomberg, we get to see the real clear politics. We were able to track the numbers as we were running up to the election. You're able to sort of plot them next to any of these sectors, and you could see how they behaved as Trump's chances went down and they went up, and you could see the clear relationship. And if the relationship made sense, right, then you have to dig further into it. But as you said, in a lot of cases, we're very fortunate we get to focus on long-term investing, right? And so, we're not necessarily, we try not to concern ourselves with what's happening right in front of our feet. We like to think, super long-term, which today's day is like 2 years, right? So we're starting to think like that. So a lot of these trades, we feel are trades that make sense. Some of them are a little out of control. I won't mention any names of specific stocks, but some of them traded like meme stocks, I think. And these are good companies that may not be meme stocks, but they're behaving like meme stocks. So you have to take a step back. I mean, even if you take a look at Bitcoin, which is raging, we allocate to Bitcoin. We think it's something that we need exposure to. But would we put new money in at this point? We think it may do better under a Trump. At this stage, we are at a show me stage. Well, let's see what you can do now. We can't make any speculations anymore at this point.
Cash, I want to give you the last word here. Got about 30 seconds left. You see a lot of technology in the military, and we oftentimes see technology develop from military tech. What's exciting to you out there right now?
I think there's a bunch of stuff. There's been some tectonic shifts in the nature of warfare. I think a lot of people followed the Anduril acquisition, which came straight out of the Ukraine war, and how drone technology has changed the nature of warfare. I think military people are particularly attuned and particularly acute to these changes in technology. I've been using Palantir for probably 15 years in an operational capacity. So every once in a while, like while we're not always the most sophisticated conglomerate, we do have access to some emerging technology, and I think that's a strength.
Kaj Larson, Head of Military Investing and Communications, and Mark Malik, Chief Investment Officer at Siebert Financial.